And that trade, it is reported, made roughly $20 billion or so for you and your investors. Nobody has reported anything more profitable than that in the Wall Street, I'd say, last couple of decades or so in one trade. Did you have any doubt that that trade was going to work?
Well, we were pretty convinced that the mortgage market, segments of the mortgage market, were overvalued and were likely to implode. So we took a very concentrated position in these securities, and what we expected to happen happened.
It can't be that easy because nobody else quite did what you did. So at the time that you were doing it, did you have any sleepless nights saying, hey, I might be wrong and maybe I'll lose a lot of money, or you didn't really worry about that so much?
Well, again, it was structured where the downside was very limited. I think the reason why other people hadn't done it is because there had never been, according to Moody's and S&P, a default of an investment-grade mortgage-backed securities. Mortgage-backed securities were viewed as the safest securities next to treasuries. And that was essentially true up until that point. What they missed was the underwriting quality had never been as poor of securities as it had been in that period. So the fact that they hadn't defaulted in the past had nothing to do with whether or not the securities that were being issued would default in the future.